Porsche has made a big decision going forward. The company will be listed on the stock exchange. So if you've ever dreamt of owning a little bit of Porsche, this is your chance. Want to know everything regarding the company's new approach? Well, we'll be answering all your questions. So keep watching this video to find out all the deets. First up, Porsche is going to become a publicly traded company. Volkswagen AG's Supervisory Board has decided to pursue an IPO of up to 25% of the luxury automaker's non-voting preferred shares. The preferred shares will be listed on the Frankfurt Stock Exchange regulated market. The planned IPO is scheduled for the end of September or the beginning of October, and it is expected to be completed by the end of the year, depending on capital market conditions. Oliver Bloom stated that they are delighted with the Volkswagen's Supervisory Board's vote in favor of a Porsche AG IPO. This is a watershed moment for Porsche. They feel that an IPO would provide them with greater independence as one of the world's most successful sports car manufacturers. Plus, it would increase their ability to carry out their approach in the future. Porsche AG's share capital was divided into 50% preferred shares and 50% ordinary shares in preparation for the IPO. To facilitate a meaningful free float, up to 25% of Porsche AG's preferred shares will be listed in the IPO, and they will also contribute to the development of a liquid aftermarket for Porsche AG shares. Moving on, public offer to retail investors in several European key markets. The initial public offering will include offerings in Germany, Austria, France, Italy, Spain, and Switzerland, as well as private placements to institutional investors. Lutz Meschke underscored Porsche's solid financial track record, generating appealing financial results and fulfilling the desire of sports car fans worldwide. They're committed to continuing their successful journey in the future and want to capitalize on a structural growth environment for modern luxury vehicles. Also, they feel Porsche is well-positioned and will continue to prioritize high quality and exclusive products, electromobility, and sustainability. As a result, Lutz believes that the IPO will attract a very strong and diverse shareholder base. Porsche wants to reach its full potential. The company is profiting from its numerous strengths, including its legendary brand and racing heritage. Plus, its unique structural growth environment, exceptional customer experience, and revolutionary battery electric vehicle technology are one of a kind. The company's dedication to sustainable luxury and people-centric performance culture is also a big competitive advantage. This is why Porsche AG wants to target a dividend payout ratio of 50% of the Porsche Group's IFRS consolidated earnings after tax attributable to shareholders. Let's look at it. The increased entrepreneurial independence. The IPO is going to provide Porsche with more entrepreneurial freedom to carry out its plan. As a result, the present domination agreement and profit and losses transfer arrangement with Volkswagen AG would be dissolved by the end of this year. At the same time, Volkswagen and Porsche have committed to continue their successful collaboration and to profit from future joint partnerships. The two companies have decided to enter into an arm's-length industrial cooperation agreement to manage their future industrial and strategic collaboration. Following up, the iconic brand and some other details. Porsche is a globally recognized brand that represents design and engineering heritage, racing legacy, performance, and modern and sustainable luxury. Its high-quality sports car portfolio runs in a structural growth environment, allowing it to become one of the world's most successful sports car manufacturers. Plus, it's operating in an appealing premium market categories likely to see increased fundamental demand in the next years, with BEVs and sport utility vehicles being key drivers. Additionally, Porsche's strategy includes a dedication to a comprehensive understanding of sustainability. Following the successful launch of the Taycan, the business is accelerating its electrification plan and has set high goals, not to mention the ambitious financial targets. Porsche will look back on a decade of steady revenue growth. The company's revenue, operating profit, and return on all sales all increased significantly in the first half of 2022. For the whole fiscal year 2022, they expect group revenues of around 38 to 39 billion euros and a group return on sales of 17 to 18%. The outlook is predicated on several assumptions, including the likelihood of ongoing favorable currency tailwinds and no severe deterioration in economic or political situations, as well as future significant disruptions in supply chains. Also, it intends to produce mid-term group revenue growth at a compound average growth rate of 7 to 8%. The organization has also established a long-term goal of reaching a group return on sales of more than 20%. Lastly, what does the Porsche IPO mean for Volkswagen? Ferrari went public in October 2015 and all hell broke loose. To be honest, it's difficult to imagine another automaker having such a media frenzy or a more hyped up IPO. To some extent, that was understandable because financiers recognize that this is is a legitimate investment. Demand was great and everyone wanted to be a part of this historic event. But then the company went bankrupt and the stock plummeted. Since then, the Ferrari stock has reached new heights, but Volkswagen investors can expect the Porsche IPO to follow the same pattern. Going forward with the IPO at a time when Western Hemisphere inflation is rising and the United States is in a recession does not appear to be the greatest approach. To understand the pulse of the market, just look at the fintech sector and ongoing difficulties that companies are now dealing with. Volkswagen, on the other hand, has made a deliberate move. The German automaker must boost its financial flow. Despite the early excitement, there is a danger that Porsche's IPO could backfire. One stakeholder stated that IPO would not generate value in the long run, and Porsche would be better off staying part of the Volkswagen Group. Now, onto some other news. First off, Honda set up a China venture to make batteries for EVs. Honda Motor Company has announced that at the end of the month, its Chinese subsidiary will form a joint venture with the Dongfeng Motor Group and Guangzhou Automobile Group Co. This will be done to produce batteries for fully electric vehicles. The automaker's Chinese division also agreed to strengthen its existing partnership with the CATL, the world's largest battery maker, to ensure a steady supply of batteries. At the moment, Honda's joint venture in China is to manufacture and market four-wheel cars. Also, Dongfeng Honda and Guangyi Honda acquire their batteries from CATL separately. The most recent move will allow for the centralization of battery procurement through the soon-to-be-launched joint venture to boost efficiency. Honda will contribute 50% of the joint venture's capital, while Dongfeng and Guangzhou will contribute 25% each. Plus, the Japanese automaker announced cooperation with trade company Hanwha Co. to ensure a steady supply of metals used in batteries for electrified vehicles. Up next, Toyota will convert engine plants to battery factories. Toyota is speeding up its shift from internal combustion engines to battery-powered vehicles. The company is transforming powertrain plants in Japan into battery manufacturing facilities. The updates are part of the automaker's $5.6 billion investment plan, which was disclosed this week. The Shimoyama engine facility and the Myoki powertrain factory are located near Toyota's worldwide headquarters, and they will be modernized to produce batteries for electric vehicles. Prime Planet Energy and Solutions, a battery joint venture between Toyota and Panasonic, will manage battery production at those locations. They would like to put their manufacturing technology and talents to use in the production of engines and other items. In addition, the company intends to build a multi-powertrain production system using parts from battery production. This is done to provide a wide range of options. The shift provides some insight into Toyota's response to the industry upheaval as established automakers strive to upgrade in the new age of electrification. Finally, GM offers a tiny convertible electric car in China. The Cabrio, a two-seater convertible electric vehicle, is being launched by General Motors' China joint venture, capitalizing on their spectacular success in Hongguang Mini in the world's hottest EV market. Customers will have to enter a lottery to be able to drive a Cabrio manufactured by SAIC GM Wuling Automobile Co., and winners will be notified later in September. Zhang Yuqin said that the strategy is owing to a small manufacturing run of between 100 and 200 automobiles per month. Plus, there is room to ramp up based on demand. The model's pricing has yet to be determined, although it is estimated to range between 100,000 and 200,000 yuan. The Cabrio was first shown at the Shanghai Auto Show in 2021 and was created with the loyal Hongguang customers in mind. Some of them were modifying their cars and have requested a convertible type. The Hongguang Mini starts at under $4,700, and it was the best-selling electric car model in China last year. It had over 426,000 units flying off the assembly line because of its low price, charming features, and tiny shape. Tesla Incorporated sold 321,000 EVs in China during the same period, accounting roughly for half of its global sales. And that's a wrap for this video. What do you think about Porsche becoming a publicly traded company? Let us know in the comments down below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.